Pinch punch, it's the first of the month. It's a foggy old Wednesday, the 1st of May. So, what do you think about the property market right now? Some think the market is affected by high interest rates, yet mortgage approvals suggest it might be the most buoyant since September 2022. And this is something the Bank of England will be aware of. While property prices are obviously not part of CPI inflation data, many of the ancillary costs relating to property do make their way into that basket of goods. So when lower interest rates do drive more demand in the property market, this is another area of inflationary pressure for the MPC to consider. The month of May should bring more clarity to central bank policy. We've got the Fed meeting this week and the MPC meet next week on May the 9th. While a rate cut is not expected, the market certainly hopes for a little more advanced guidance about when cuts may start. Step up, Andrew Bailey. It's your time to shine. Hi, good morning. And over in the US, there are still occasional doubts raised over a soft landing. Since the rate hikes ended, the Fed has dropped a few hints about when rate cuts may begin, only to then pull back from the brink as inflation has become a little bit too sticky around the 3% level. Indeed, the 2% target is looking pretty hard to achieve right now, where the economy is showing signs of a slowdown. This may lead to a choice of growth versus inflation. The Fed need to let the economy drop further, maybe even into recession, as we've seen in the UK, in order to see inflation pull back further. As we've seen in the UK, this drives renewed calls for a rate cut from those who value growth more than they fear elevated inflation. And the Fed will likely face a similar quandary to the Bank of England. Where employment data is still strong and GDP is the strongest in the G7, US inflation may not fall much further without more tightening of monetary policy. The Fed meeting kicks off today and the market expects them to retain a hawkish bias with no mention of a rate cut happening any time before September. The key focus, though, will be on the dot plot and any change to the outlook over how many rate cuts we may have in line this year. In the market, the dollar index saw plenty of activity at month end with all the position squaring. That rallied to 106.45, which was the highest month end close since October. Sterling ended the month on the back foot. We dropped to 124.70 against the dollar. But we kick off the new month. We start around 124.75 against the dollar, 117.10 against the euro, and euro dollar is around 106.55 on the open this morning. That's it from me. Happy May.
If you do not have a clue, then just tweet through and ask FxPlew.